Bitcoin versus Dogecoin.
Welcome back to another lesson, folks. In this video, I'll cover the following topics. What is cryptocurrency? What is Bitcoin? How does Bitcoin technology work? What is blockchain? Why is Bitcoin worth so much? What is Dogecoin and how it came to light? So, let's dive right into it. What is cryptocurrency? A cryptocurrency is a digital or virtual currency that is secured by cryptography, which makes it nearly impossible to counterfeit or double spend. The word cryptocurrency is derived from encryption techniques which are used to secure the network. Many cryptocurrencies are decentralized networks based on blockchain technology. What is cryptocurrency? A cryptocurrency is a digital or virtual currency that is secured by cryptography, which makes it nearly impossible to counterfeit or double spend. The word cryptocurrency is derived from the encryption techniques which are used to secure the network. Many cryptocurrencies are decentralized networks based on blockchain technology, a distributed ledger enforced by a disparate network of computers. A defining feature of cryptocurrencies is that they are generally not issued by a central authority, rendering them theoretically immune to government interference or manipulation. How do you get cryptocurrency? Any investor can purchase cryptocurrency through crypto exchanges like COINBASE, Cash App, and many more. I personally like to use COINBASE and have put a link in the description below which will take you directly to their website where you'll actually be able to see all the different types of cryptocurrencies available on their platform. What is the point of cryptocurrency? Many experts see blockchain technology as having serious potential for uses like online voting and crowdfunding. Major financial institutions such as JP Morgan Chase see the potential to lower transaction costs by streamlining payment processing. How does cryptocurrency make money? Cryptocurrencies allow for secure payments online which are denominated in terms of virtual tokens, which are represented by ledger entries internal to the system. Investors can make money with cryptocurrencies by mining Bitcoin or simply selling their Bitcoin at a profit. Right, let's start with Bitcoin. What is Bitcoin? Bitcoin is the talk of every town, but what is it? Well, Bitcoin is the very first digital currency that provides a value of exchange which is used and distributed electronically via the ether. It is popular due to its decentralized currency as the control does not lie on any central authority. Bitcoin was launched in 2009 by an individual. There may have even actually been a group, but they are unanimous. All we do know is that they go by the name of Satoshi Nakamoto. As of March 2021, there were over 18.6 million bitcoins in circulation with a total market cap of around $927 billion. Forex currency is classified as fiat money and is centralized by a governing body as its value can increase and decrease based on supply and demand of how much has been printed. Bitcoin is the more traditional of the two and the world's most popular cryptocurrency. The digital currency soared to a new record high value of $63,200. Bitcoin's recent gains were fueled by historic stock market debut of cryptocurrency exchanges. Operators such as COINBASE, which launched a direct listing on the Nasdaq on April 14, 2021. Shares of COINBASE, which trade under the ticker coin, opened at $381 a piece, giving the company a valuation of about $99.5 billion. The popular cryptocurrencies surge also came as Tesla, Square, MasterCard, BNY Mellon and Twitter expressed increasing interest in digital currencies. Venmo announced on Tuesday that it would be allowing users to buy, hold, and sell crypto, and WeWork announced that it would be accepting crypto payments. Let's have a look into the market size. One Bitcoin was recorded at an astonishing $56,588. This is equivalent to £46,212 as of Tuesday, 13th of April 2021. Bitcoin uses a sophisticated fintech. People usually misconceive Bitcoin as a revolutionary technology. However, Bitcoin itself is not revolutionary in nature at all. Blockchain technology, the technology behind Bitcoin, is actually a path-breaking one. And Bitcoin is a small yet important application of the potential blockchain technology. What is blockchain? Blockchain is a distributed ledger that keeps a track of the information transferred between every sender and receiver in the loop through encryption techniques. Distributed ledgers have an edge over centralized systems as there is no chance of losing data. The distributed system takes care of every transaction that takes place by keeping it recorded securely. Why is Bitcoin worth so much? The price of Bitcoin is not equivalent to its value and is determined by the market's demand and supply. The ongoing trading interactions between buyers and sellers determines the exact price of Bitcoin. The supply of Bitcoin is capped at 21 million, with 16.2 million currently in circulation. The coins are actually mined by supercomputers that perform lots of algorithmic calculations to actually release Bitcoins. Since the market of Bitcoin is relatively small, therefore it does not take significant amount of money to alter the market price, adding to the vast and extreme volatility. However, eventually, volatility is expected to reduce. Let's take a look at what Bitcoin's logo looks like. Right, so that was Bitcoin. Let's have a look at Dogecoin and look at what the key similarities and differences are between the two. Dogecoin is a cryptocurrency that was created as a joke in 2013. Its name is a reference to a popular internet meme. It shares many features with Bitcoin. However, unlike Bitcoin, there is no hard cap on the number of Dogecoins that can be produced. In recent weeks, investors saw its value skyrocket 500% according to Friday data from COINMARKETCAP.com. Let's have a look at the market size of Dogecoin. Dogecoin was listed at about $0.38 compared to about $0.009 in January. One Dogecoin had a max value of $0.45 and the supply is unlimited. Similarly to a trading frenzy that occurred in late January when a group of traders on the speculative investing Reddit forum Wall Street Bet banded together to squeeze the GameStop's short sellers and cause its share price to soar, users on a Reddit forum called Satoshi Street Bet helped prompt last week's Dogecoin's upswings. Let's talk a little bit about how Dogecoin came about. In 2013, seeing thousands of cryptocurrencies mushrooming every day, Jackson Palmer, one of the co-founders, and he was an Adobe software engineer at the time, and Billy Marcus, IBM software engineer, decided to create their own not-so-serious currency. Interestingly, Marcus had already launched his own cryptocurrency, by that time called Bells, following a guide he found online. It spectacularly failed. It took just 3 hours to create Dogecoin. It was a find and replace job, Control plus F, of Bitcoin, replaced with Dogecoin. Changing a few core elements in Bitcoin's source code, Marcus created 100 billion Dogecoins and made them easier to mine. No Dogecoin was pre-mined since only those who are serious about launching a cryptocurrency do this. It just wasn't these guys' story. Marcus didn't even have a computer powerful enough to mine longer than 5 minutes, so he split what he had mined 50-50 with Palmer, about $5,000 worth of Dogecoin. And that was it. Still, the name Dogecoin echoed throughout the dark corners of the internet. Reddit and its tipping bot drove Dogecoin into the stratosphere. The Dogecoin frenzy is actually the reason Marcus bailed on it in 2015. In his view, Dogecoin was a silly thing that should remain silly. A bit later, the Moolah scandal pushed Palmer to quit Dogecoin too. Today, a lead developer is Max Keller. Others are Ross Nickel and Patrick Lodder. As you see, its founders do not hold back that Dogecoin was actually created as a light-hearted joke. However, despite this unusual origin story, or maybe thanks to it, Dogecoin has exploded in popularity in 2021. Dogecoin has become the 6th largest cryptocurrency by market cap as of today. Let's take a look into the Dogecoin logo. Right, so that was Dogecoin. Let me know in the comments below which one you prefer. Do you prefer Bitcoin, or is it because you've heard more about Bitcoin, or do you actually prefer Dogecoin? Blockchain. Advantages of blockchain. Cryptocurrencies hold the promise of making it easier to transfer funds directly between two parties, without the need for a trusted third party like a bank or credit card company. These transfers are instead secured by the use of public keys and private keys and different forms of incentive systems, like proof of work or proof of stake. In modern cryptocurrency systems, a user's wallet or account address has a public key, while the private key is known only to the owner and is used to sign transactions. Fund transfers are completed with minimal processing fees, allowing users to avoid the steep fees charged by banks and financial institutions for wire transfers. Let's take a look into some of the disadvantages around cryptos. The semi-anonymous nature of cryptocurrency transactions makes them well suited for a host of illegal activities, such as money laundering and tax evasion. However, cryptocurrency advocates often highly value their anonymity, citing benefits of privacy like protection for whistleblowers or activists living under repressive governments. Some cryptocurrencies are more private than others. Bitcoin, for instance, is a relatively poor choice for conducting illegal business online, since the forensic analysis of the Bitcoin blockchain has helped authorities arrest and prosecute criminals. More privacy-oriented coins do exist, however, such as Dash, Monero or Zcash, which are far more difficult to trace. Although listed as an advantage in the previous section, not being regulated means there is nothing stopping a brokerage from closing down with all your funds trapped within it and disappearing from the face of the earth, or from the account being hacked and millions of cryptos being stolen. This has happened in the past, and there are ways to prevent this from happening, such as storing your coins in a digital wallet which is encrypted on a USB that is detachable. Blockchain. What is blockchain? Blockchain is a distributed ledger that keeps a track of information transfer between every sender and receiver in a loop through encryption techniques. Distributed ledgers has an edge over centralized systems as there is no chance of losing data. The distributed system takes care of every transaction that takes place by keeping it recorded securely. Right, so that was Bitcoin versus Dogecoin. If you feel like you learned something today, please click that like button down below and even drop me a comment in the comment section. Let me know, which one do you prefer, Bitcoin versus Dogecoin?
Like, share, and subscribe. More free content available on our Instagram page at upskill_finance.